One day, the most important Bitcoin news may be a single transaction from an ancient address. A wallet from Bitcoin's earliest years wakes up after more than a decade of silence. The coins move. Analysts open the address history. Exchanges start watching deposits more carefully. The entire market begins asking the same question. Did an old owner finally return? Or did someone build a machine powerful enough to calculate the key? This is the real fear behind quantum computing and Bitcoin. It is not about a computer deleting the blockchain. Bitcoin is a ledger copied across thousands of nodes. The deeper danger is much more specific. A future quantum computer could attack the cryptographic proof that decides who has the right to move coins. To understand this, forget the price chart for a moment. Bitcoin ownership is built around keys. A private key gives you the power to sign a transaction. A public key lets the network verify that the signature is valid. In normal conditions, this works in one direction. From private key to public key is easy. From public key back to private key is so difficult that classical computers are effectively useless. That one-way door is one of the foundations of Bitcoin. Quantum computing threatens that door because it does not think like a normal machine. A classical computer works with bits, zeros and ones. A quantum computer works with qubits, using effects like superposition and entanglement to attack certain mathematical problems in a completely different way. This does not make it a magic computer that wins at every task. For most things, it is just an exotic machine in a laboratory. But for some forms of cryptography, it is exactly the kind of monster you would design if your goal was to test the locks of the digital world. The name to remember is Shor's algorithm. Shor's algorithm can, in theory, break the kind of elliptic curve cryptography used in Bitcoin signatures if the quantum computer running it is powerful and stable enough. In plain language, the machine could look at a public key and work backward toward the private key. It would not need to steal your seed phrase. It would not need your laptop. It would not need your exchange login. It would attack the mathematics of ownership itself. There is another algorithm called Grover's algorithm, which is often included in the panic. But this one matters differently. Grover can speed up brute force search and weaken hash security. But Bitcoin's SHA-256 remains extremely strong, even under that kind of pressure. The real fear is not mining collapsing overnight. The real fear is exposed public keys, and this detail matters. Some Bitcoin address types hide the public key until the coins are spent. That gives users a layer of protection before spending. But older Bitcoin outputs, reused addresses, and some early address formats expose public keys directly on-chain. Those coins are more interesting from a quantum risk perspective because the future attacker would already have the material needed to begin the calculation. That is why Satoshi-era coins are such a powerful symbol in this story. They are not just old coins. They are part of Bitcoin's mythology, sitting openly inside a public ledger, while the world slowly builds machines capable of testing old cryptography in new ways. Now we put the panic under control. The quantum computer capable of doing this to Bitcoin does not exist today. Headlines about qubit numbers usually talk about physical qubits, and physical qubits are fragile, noisy, and full of errors. A real cryptographic attack would require reliable logical qubits, heavy error correction, and a machine stable enough to run an enormous computation without collapsing into noise. The gap between today's quantum hardware and a Bitcoin breaking machine is still large, but large gaps can close. That is why the serious question is not whether Bitcoin dies tomorrow. The serious question is whether Bitcoin can migrate before the threat becomes practical. The rest of the internet is already preparing. In 2024, NIST finalized the first post-quantum cryptography standards. Browsers, cloud services, governments, and security companies are moving toward algorithms designed for the quantum era. This is the useful comparison with Y2K. The year 2000 problem had real technical risk, but disaster was avoided because engineers acted early. Bitcoin can follow the same path, but Bitcoin has a harder problem. It is not a company with one security department. A quantum-safe Bitcoin would need proposals, testing, debate, consensus, wallet support, exchange support, and users moving funds into safer address types. Active users can migrate. Lost wallets stay where they are. Dead owners cannot sign new transactions. Forgotten keys do not wake up because the protocol needs them. This is where decentralization becomes both Bitcoin's strength and its burden. A bank can update its internal systems over a weekend. A tech company can push a security patch. Bitcoin has to convince a global network to move without appointing a central authority to move for it. That is slower, messier, and more honest. So, will quantum kill Bitcoin? Today, no. The machines are not ready, the threat is not practical, and the world already knows the direction of the fix. But quantum computing will force Bitcoin to pass one of the most important tests in its history. Can decentralized money upgrade its own locks before the machines built to test those locks become strong enough? If Bitcoin moves early, quantum becomes an engineering challenge. If Bitcoin waits too long, the warning may arrive through ancient coins moving on-chain, and the market will remember that digital ownership is not mythology, not branding, and not belief. It is proof of control, and every proof has to stay stronger than the machine trying to break it.